Well, more now on that breaking news on Google. Looks like it will get government approval for its deal to buy the online travel company ITA Software. Two people familiar with the matter tell Bloomberg that Google has reached this deal with the government on licensing and monitoring. We are joined right now by Bill Whyman. He's the Senior Managing Director and Head of ISI's Tech Strategy Research Team. John with me as well. And how significant, Bill, is this that they perhaps have gotten to a settlement?
Well, this is important. Google really wants to do this deal. Travel is a very lucrative vertical because for the first time they're really agreeing to ongoing government supervision of their business. And this sets a very important precedent that tends to have forward consequences.
What does that mean, Bill? It's John Erlichman. What does that government supervision mean? What are the kinds of things that the government will now be able to do that they weren't really able to do with Google before?
So the details will be important here, but I would expect that there'll be non-discrimination requirements. It also looks like they're asking for a firewall to make sure that Google can't use control over the data to see what's going on and advantage or disadvantage others. So I think it's going to be a variety of oversight conditions. And the going forward risk is that these get broadened. So do these just apply to the travel vertical? But then if Google has agreed to them in travel, then others will certainly argue, well, why don't you expand these to other areas? And you can certainly expect Google's competitors to do that.
So then did they give up too much, perhaps, by conceding, whatever it is that they have conceded, because like you said, the details aren't out there yet. Now that they've made these concessions, have they risked then some of the growth potential?
Well, I think given Google's size, its success, the market share in core search, government oversight or monitoring of its business is increasingly likely. So I think investors need to think of this as a cost of doing business for Google. This is going to be a reality for them going forward, not just in the U.S., but I think very importantly in Europe and overseas as well. So I think this was coming. The question was where and over what issues, and I think this will be the first test case.
Bill, just to follow up on what Betty was saying, this is a business they paid, what, something like $700 million for. So, as an analyst, do you say, was it worth $700 million given what could happen down the road?
So the key for Google is scale. As you know, they have the dominant share in search, and they're trying to expand into other verticals that are growing more quickly. And travel is a heavily transactional business, and that is even more valuable for Google. People want to book things online, which means the value of a search is high. So I think they're focusing on one of the right verticals, and they will have the scale to leverage this in a way that others can't. So strategically, I think this deal makes sense.
Well, it kind of makes you wonder, right, whether or not, what does this then allow Google to do that maybe there was this regulatory overhang that you didn't think it would be allowed to do? I mean, is there, Bill, do you have a thought on that? What does it clear the way for, perhaps, for Google?
So I think they'd like to embed travel information in many other different services. So think you have an Android phone, you're heading to the airport, and boom, they can hit you with latest travel information. They can intertwine that data with other applications and services that they're offering. So I would expect Google to take this asset and to try and roll it out more broadly across other applications and services, not just search.
Bill, now that they have this deal done and you raise all these issues that could be serious issues for Google going forward, because this company gobbles up so many other companies so quickly, do you think they're going to continue to buy companies at that same pace, or they're going to say, this is the new regulatory reality, we want to get into these businesses, but let's just build them, let's not buy a company?
Right. So the prior CEO had made very clear that they were in acquisition mode. As you know, there's a new CEO that's just taken over Larry Page. I would expect there to be more M&A, but increasingly maybe smaller, more technology-focused. All companies face a buy or build decision, and I think we can expect to see Google do both of these. But when you go to the government and say, I want to acquire someone, you're in the mother may I position, and so it gives the government government leverage. So I think it does raise the hurdle. It raises the threshold around which Google is going to have to jump before it says, I'm going to buy a company of any size.
I mean, that could mean huge ramifications for all those companies that thought they might get gobbled up by Google, by the way, as well.
Right,
Yeah.
right, because there's a second thought on that.
Yeah, right.
Thank you, Bill, for joining us. Bill Whyman, ISI Senior Managing Director and also the Head of Technology Strategy Research. We're certainly going to keep following the fallout from this.